Hey traders, Nick Shaheen here, looking at Coinbase, but not so much a recommendation on the stock. In fact, this is not a recommendation for any trades whatsoever. I had a discussion earlier today with somebody in the chat room. I run the chat room. We have almost 300 people in there, and we'd love to have you in there. So link in the description, click on it. It takes you to PayPal, $0 for 10 days. It's not free to be in there, but it's free to try it out for 10 days. So join us if you're a nice person. So Coinbase is like a never-ending bottom here, keeps setting lower lows. And the question was, how low can it go? Well, zero, that's every stock's low. But clearly they have a business. They're in the right area. The market they serve is hotter than anything. So you would imagine that they're going to continue doing as well as they have been. Having said that, it's a relatively unproven company, so we can't speak to anything below this $250 value. So the person owns shares, and they said, I'm looking to get out. I'm worried about my money. I said, well, have you considered a stock replacement strategy? Which is the point of this video, is to show that options give you alternatives. Options, they give you options. So if you haven't done options, you have it in your head that options are more dangerous than stocks. Let me prove to you that that is a false statement. I'm not saying they're safer than stocks. I'm just saying they are not more dangerous than stock. And in certain conditions, they offer safety, like this one. So let's say they have $50,000 tied up in stock in this company. I don't know how much they have, but let's say I'm using 50 grand. And they want to be long, but they're worried about their money. So they said, I'm closing. They literally said that in the chat room. I'm closing. I'm exiting. I said, well, have you thought about a stock replacement strategy? And I went ahead and explained it. And let me tell you in a couple of minutes how this works. And I would never sell a naked put unless I wanted to own shares. So how does that work? I sell my stock. I collect my money back. So I get my 50 grand back. And now I'm no longer long the stock. But I want to be long the stock. But I don't want to risk my money. So I ask you, hey, would you rather be long at 200? Let's see, 200 down here? Yeah. I can do that. Okay, so I go and sell a $200 put for December. So now I'm long for the whole year because I collect money right now, like $1,600. And in return, I promise to buy the shares at 200. That's the only thing that happens. No money out of pocket. My 50 grand is back into my pocket. I love the stock at 250, but I'm worried. At 260, and I'm worried. So somebody's paying me to get out and buy it back at 200, sweet. So worst case scenario, the stock rallies and I made 6%, equivalent of a 6% rally. And then after that, I can't make any more because the maximum I can make is the $1,600 I collect right now. Worst case scenario, the other worst case scenario is the stock collapses and hits 200 or lower. At any point in time, it doesn't have to be at 200. The person who bought the put from me, the person who gave me the $1,600, may give me their shares because that's what I promised. I took the money because I promised that I will buy their shares at 200. So one day I could wake up owning 100 shares per contract. So that's the worst case scenario. Meanwhile, somebody who stayed in the stock, they lost another 22%. So how is this safer than getting out here, collecting money, and then possibly getting down here without and avoiding the 22% decline? So somebody that didn't do this, they're now down 22%. Me, who did this, I'm down nothing. In fact, I'm still up $1,600. When do I start losing? If I get put the stock at any point in time, and then the stock continue, and I don't sell it when I wake up, the stock is in there. I can just sell it. And what happens to the put I sold? It just disappears. So here is the big scary part that people just say, oh my God, I lost 1,000% from this trade. That's because stocks start falling. The put I sold turns into way more expensive than I collected. So if I collected $16 to open it, 1,600, now it turns into 10,000. But it's paper losses. The only way I realize the loss is if I actually buy it back to close it. If I don't buy it back to close it, let the buyer of the put give me their shares like they said. I will take the shares. The losses on paper, the 1,000, 2,000, whatever it is, percent, poof, they go away. I wake up, that position is gone. The put position is absolutely gone off my books. My market value will go back to what it was. In replacement, I would own shares. at 200. So if it's at 190, it looks like I lost $10, but I didn't because I collected 16. So I still have another $6 of buffer. I don't start losing until I hold my shares below 184. So if I wake up and I own shares, they gave me the shares and it's at 190 and I sell the stock, so I made $6 per share. That would be one scenario. Stock replacement. Ditch the stock. I would ditch the stock and I would sell a put if I wanted to stay long. This way I'm long the stock with a finite profit amount and with the obligation to own shares at 200 down here, thereby avoiding the potential correction. That's it. I don't know the company very well, so this works on any company. And the point of this video is not to recommend Coinbase at all. It's just to say I was trying to help a friend on how to manage a position that they liked, but they wanted to exit because of the current market conditions. That's it. Hopefully that helps people out there. And if you're interested, we do this stuff all day, every day, even Saturday and Sundays. Webinars on Sundays, by the way. Free webinars every Sunday morning. We chart the heck out of everything for like 2 hours, maybe an hour and a half.